Hey everyone, welcome to the Smart Economy Podcast, a production of neonewstoday.com. I'm your host, Dylan Grabowski. In this episode of the Smart Economy Podcast, I sat down and spoke with Zac Townsend, the CEO and co-founder of Meanwhile. Meanwhile is the first and only life insurance company denominated in Bitcoin. With Meanwhile, customers can get the same level of protection as traditional life insurance, but their premiums and payouts are denominated in Bitcoin instead of US dollars. In this conversation, Zac and I discuss using technology to improve institutional processes, how life insurance products work, how life insurance can ensure Bitcoin's longevity, the product Meanwhile offers and the types of customers they seek, how life insurance can be a part of a balanced financial portfolio, and much more. Just a reminder, nothing said on this podcast is a solicitation to buy or sell any tokens, that nothing should be taken as financial advice, and that the host or guests may hold tokens discussed in any given episode. With that said, I really enjoyed chatting with Zac, and I hope you enjoyed the conversation too. Hey everyone, welcome to the Smart Economy Podcast. Today we're joined by Zac Townsend, the CEO and co-founder of Meanwhile. How's it going today, Zac?
Great. Really happy to be here, Dylan.
Yeah, me too. Excited to dig into a lot of the things that you've been out there talking about on podcasts and with other content shows that you've been on. But before we delve into a lot of the great things that you're talking about right now with Meanwhile, we were just chatting that we shared a similar background. Before working in the crypto and blockchain space, I myself was an urban planner and I worked at various different levels of government. We both shared time at the state of California government, which a lot of crypto folks might be hissing at right now or snarling at. And I was also
I wasn't at the tax authority, just to be clear.
Yeah, me neither. I worked at Caltrans as a transportation planner, so don't put us out to dry too quickly. But can you just share a little bit about, before you got into the tech side of things, what your background was in the government and political space?
Well, sure. When I graduated from college, I actually went to go work at this consulting firm that was all folks who had worked for Mike Bloomberg when he was mayor. So it was in New York City. And we did really like management and data-driven consulting for cities across the country. And as part of that, I got involved in Newark, New Jersey, and I grew up in New Jersey. And Cory Booker was recruiting for someone to come be the head of innovation. And if you're like, what does that mean? It really meant anything that needed to get done. So the story I really tell about the nitty gritty is there used to be a really long line every day with people trying to get their birth certificate, their vital records in the city of Newark. So I just went and created that office and access database. It wasn't like I did anything really super fancy, but it really like cut wait times down literally by hours. So I really went all over the city doing things like that. And I got really interested in financial inclusion and financial empowerment and like money stuff and why do people in West Newark not have bank accounts and payday lending and check cashing and all this stuff, because I just got assigned that portfolio randomly. So when Mayor Booker decided to run for Senate, I was like, I don't really have any interest in the Senate. I don't know, really what senators do. So I moved out to San Francisco and very briefly had a job at Stripe. And that my theory was like, okay, if I care about financial inclusion, like let's work on financial infrastructure. And I was just like on Hacker News and I was like, well, this Stripe company seems cool and they're building financial infrastructure, and I'll be like, good segue into that. And then in what was the best or worst decision of my life, so I guess the worst financial decision, like the best life decision, is I got into YC and left Stripe after a few months and built this company called Standard Treasury. And Standard Treasury was basically like what now we call like banking as a service company. So it was like banking APIs and all this infra between banks and fintechs. And to not make this a whole podcast about my first failed company, I learned a lot, and we were absolutely right about the world. And actually, multiple people on my team went to found successor companies. So Treasury Prime is literally a joke about Standard Treasury. It's like Standard Treasury version 2. And there's a bank in the UK called Griffin, which is like an AWS for banking. It's founded by another guy on our team. So like we were right, but we were just like too early. And we sort of like failed into an acquisition. And that's actually when I got into sort of first got exposed to crypto. So Brian and Fred at Coinbase wanted to acquire the company, and they like needed like payments risk compliance people. So there's another like chance I guess I could have had $100 million if I did something different. And so I first like I knew about Bitcoin, but I actually like got my first Bitcoin in a meeting with Brian, like sending me Bitcoin, like on Coinbase. But what happened is a bunch of people on the team were like real crypto skeptics, and Coinbase was basically like, we can't hire like all seven of you because it'd be such a culture bomb because so many of you are crypto skeptics. So they're like, okay, we'll take this half about this other half. And we were just like, okay, we didn't want to leave anyone high and dry. We wanted to like make sure everyone ended up in a good place. So we had another offer from Silicon Valley Bank, which is sort of funny to say now, but it was a legit place to go work in 2015. There wasn't any signs it was going to blow up. And they wanted the whole team. They wanted to continue the product. They wanted us to own like API banking. So we went to SVB. But I stayed interested in crypto sort of as a side thing, like really from that moment. And then when I was at SVB for about a year and was really miserable, I was looking for any way to leave. People who worked for Governor Brown, the governor of California at the time, approached, they were looking for a chief data officer to really build out so that capacity in the state. And they asked Corey's chief of staff for a recommendation. They recommended me. And that's sort of like how I ended up going and doing that gig for a year.
Awesome.
Anyway, I'll pause. I'm telling my whole life story, which wasn't really what you asked, but
you just like barreled through like three questions I had lined up. So I think something that will be super interesting to our audience is, correct me on my timeframes if I'm wrong, but you were building Standard Treasury from 2012 to 2016.
It was really 2012 to 2015, and then SVB bought us, and that was like 2015, 2016.
Yeah, well, back in the day, like SVB was also one of the only banks that was, reputable enough and willing to work with the cryptocurrency space as a whole.
Yes. And also, I think they were doing some really, like Coinbase was working with SVB at the time, but I didn't join SVB because of I didn't do a lot of work there on crypto stuff.
Right. So I'm curious then, because you were saying that when you were at Standard Treasury, this is a group of folks who want to incorporate new access to APIs and new technology to, what's the best way to put it? Update outdated government systems.
Yeah.
Yeah. So you guys essentially sound like TradFi. I hate this term, but maxis at the time. And so you're meeting with Brian at Coinbase and you get your first Bitcoin. What were your initial opinions of cryptocurrency? Was it at odds with kind of the philosophy you had and the kind of rails and systems you guys were trying to build in the existing infrastructure? And then on top of the first time you heard about Bitcoin and you got it, what was your aha moment? What really clicked? What made you realize that this is the space you want to be in?
I was actually sort of intellectually interested in Bitcoin like pretty early and got introduced to it pretty early, probably like 2010, 11, 12, and really should have like gone and bought a bunch of Bitcoin. But for me, it seemed a lot more like a like what is money kind of experiment. And like read the white paper, and I really wasn't thinking of it as something that would become its own economy, which is how I feel now, and saw it more as really a point in a whole line of like what is digital money and how do we think about changing the system. And by system I mean like the literal systems that we do things like payments. So I think even when I got to know Coinbase a little bit better and got to meet Brian and Fred, this is like 2015, right? So it's still pretty early, and I think that what crypto has become and would become, and I think has the potential to become, like, still wasn't clear, right? I think it felt a lot like, one of the things I like to say is what's interesting about crypto is, usually in the history of the world, you build a real economy, and I mean that in like the economic sense, and then you build a financial economy. And I think what's interesting about crypto in some ways is we built a pretty robust financial economy, and then we're like backfilling a real economy. And I think that it definitely took me time to see the potential and the opportunity and like the I want to spend my life working on this. So in 2015, it really felt a lot like, I don't know exactly the date, but it's like this is like a Mount Gox era. This is like before, I guess, around or like the ETH IPO like isn't that far in the distance. So I think there was a lot of like intellectual stuff happening, but it still felt like trading was the only use case, and that didn't really resonate with me. And then on the aha moment, I'm not sure there was a single aha moment where I was like, "Oh my god, this is it." I think that I've been converted. I think rather it was a slow accumulation of I was spending more and more of my time reading about it. I was spending more and more of my time thinking about different protocols and different tokens and like what I want Bitcoin to be. And so, yeah, when we sat down, my co-founder Max and me, and we're the type of friends that like we'd sit down every 6 months to like think about a new company when that we might found together. And we were a little more serious because we were both like at these moments in our career where we thought we could transition into doing something together. Really one of our first, big picture ideas was, okay, we think crypto is the future and digital money is the way to go, and there's going to be so much potential, but that the next 10 years in crypto, and by the way, this is like late 2021, right? Like Thanksgiving 2021 is when we're meeting to talk about this stuff. And we said, okay, the next 10 years of crypto the value is going to accrue to people who can deal with regulatory BS. So what are business ideas we have at the interface of like regulation land and crypto land? And we recognize in ourselves that like we're good at the particular type of pain that comes from like regulation land. Anyway, we can talk more about this. But the point is like I think that it wasn't like a sudden jar. It was like, okay, this is more and more interesting. It's more and more of my time. It's more and more of what I'm thinking about. It's more and more what I'm doing. And then like when we actually came to the moment of like, oh, let's ideate on some ideas, what we ideated was, okay, what can we do like at the interface of TradFi and regulation and crypto land?
It comes from a very entrepreneurial kind of background that you have, and also your experience in working in political institutions, we could call them, maybe civic infrastructure. When I was working as a planner, I've worked at the federal level, the county level, and at the state level. And there's just outdated software at all of these levels, and it's
Oh yeah.
almost impossible to get updated because the people at the top, who are the ones that can affect the change, are not the ones who are in the weeds day in and day out dealing with these outdated systems. So I'm wondering, how did the success of your two previous startups that were kind of the intersection of tech and politics, government, civic duty, whatever you want to call it, how did that factor into your decision to kind of take the leap into providing a traditional multi-hundred-year industry in insurance and bridging that to crypto?
Yeah. So I do think that for me, there is this strand of wanting to like affect positive change in the world. And, I think obviously in crypto land, there can be a lot of skepticism that government's a way to do that. But for better or worse, like governments exist and they'll continue to exist. And for me, there's the two opportunities I had in government service was a lot about it's very hard and the software is terrible. But if you can move the course of that chip a little bit, it can often have like really big impacts and you can affect a ton of people. So, at the margin, I always saw that despite some deep frustrations in those experiences, in if you do things better, it can really affect people. And then I think my entrepreneurial experience in Center Treasury and now at Meanwhile, I think I'm motivated by the same thing, which is, if anything, in some ways, I feel now it's probably easier to do is to like build something new in the world and see it have a positive change. So on the financial infrastructure at Standard Treasury, for me, that was a lot about if we can drive the marginal costs of a bank account to zero, then lots more people should have bank accounts. And if you can drive the marginal cost of payments down, then people will do a lot more payments, right? Et cetera, et cetera. And I think you're absolutely right. from before that our framing was definitely like through TradFi. And I think, with crypto, we have a very similar view. I'm sure we'll get into what we do now, but in some ways, what we do now is we have a life insurance product that's really for like high net worth individuals. The people don't have to be like crypto whales, but the minimum size of our life insurance policy right now is 5 BTC, right? Paid over 10 years if you want, but like that's pretty significant, right? So there's not a ton of people in the world who can afford that. But for us, it's all about building that infrastructure. And by that, I mean regulatory infrastructure, technical infrastructure, compliance and risk infrastructure, everything. My ultimate vision is that anyone in the world who has concerns about currency risk or inflation risk or regime risk, should be able to buy a life insurance policy, in this global digital decentralized currency. So that's what like really motivates me in the long term, 10, 15, 20 years. It's that we think there could be hundreds of millions of users for this, and it could really positively affect their lives. Well, or the lives of those around them, I guess, in the case of life insurance. And then we have a lot of steps between now and then.
Yeah, so I guess kind of like a broader. I want to talk about some like broader general overview stuff before we dig into the guts of Meanwhile. So I guess kind of as we're jumping out of the plane and coming from the 10,000 foot view to the 10 foot view, why use Bitcoin as the digital currency? And then secondly, why meld the insurance realm with the Bitcoin ecosystem?
Well, and why Bitcoin? I think obviously it's the most developed, it's the most mature in many ways. But I think fundamentally why we started with Bitcoin is, and we're very optimistic, I think I would put it mildly, about the idea that there will be a Bitcoin economy in the future. But fundamentally, to us, Bitcoin looks a lot like it is a store of value. There are all these different things that currencies can be used for, and Bitcoin is the one that looks the most, that way. Like it's going to be a long-term store of value, and a whole culture of hodling has developed around that, intergenerational wealth transfer, and fundamentally, if you believe all of that, then life insurance makes a lot of sense, right? I think for a lot of people, they have in their head that life insurance is, just about what if you die accidentally. And there is a whole class of life insurance products that are like that. The life insurance products that we started with are called whole life, and I can explain what that means. But essentially, they're more like investments that you're making on behalf of your beneficiaries. It's much more like an investment account. So we started with Bitcoin exactly because like that's a whole mentality. That obviously what we're doing has some cross currents with self sovereignty and pure decentralization. In that, like we are a company, and you do send us your Bitcoin, but ultimately we think there's a real alignment between Bitcoin as a store of value and Bitcoin and life insurance as a vehicle for Bitcoin.
Yeah, and so I think I'm not sure if it's maybe just me and the signal I'm reading through the noise on my Twitter feed, which is mostly crypto Twitter folks, but a kind of trend I've been noticing in 2023 is this rise of the narrative of real world assets melding with blockchains. So what's your just general outlook? I mean, obviously, you're building a company that's providing life insurance using the Bitcoin network. So you obviously have a positive outlook on the melding of RWAs and blockchain technology. But where do you think like the rest of the world is? Where are the cryptocurrency entrepreneurs and where are the traditional decade long providers of insurance and other RWAs? Where do you think this narrative is going? And do you think there's merit to this kind of trend right now?
Yeah, look, let me split that into two different parts. And the first is about real world assets, and the other is, about in some ways the crypto economy. And I think those things are melding together. But I want to say that, like, I really believe that when you look out 20, 30, 40 years, and one of the nice things about running an life insurance company is like those are the time frames you get to think on, like 10, 20, 30, 40 years is just like that's what we need to operate in. Like when I look out that far, I really believe there's going to be a robust global economy, in Bitcoin and potentially in some other tokens. And what that means is not just that the real world will have to come to the blockchain, but I think also, and Bitcoin, but that Bitcoin in many ways will become more real world like. And what do I mean by that? What I mean is like that Bitcoin will need to be more than like gold in the ground. And the analogy is like you put it on your wallet and you bury it in the backyard, and then you just have this. It's gold in the ground. That's what it is, literally in that case. And I believe that Bitcoin has to be money. And like when you read Satoshi's white paper, like it is about like money and movement and payments. And what does that mean? It means that there's going to have to be capital markets in Bitcoin. It means there's going to have to be, lending in Bitcoin. There's going to have to be cash flows in Bitcoin. And I'm definitely in the camp in Bitcoin world, which is much more of like, how do we make this active? How do we make it a thing in the world? And you can have differing opinions, I think, on ordinals and lightning and stacks and whatever it is in the particular. But I'm definitely like, if the Bitcoin community is split between like people who want those sorts of things to exist and people who don't want those sorts of things to exist, I'm definitely in the like, I want those things to exist, right? Because like, what is a life insurance? Like a life insurance company is like in those classes of things, right? And then I think real world assets and tokenization, I believe all of that is absolutely going to happen because the substrates of blockchains are, and I should really put like blockchains in quotes in some ways, like, but I think the like substrates of the crypto economy are much better. And for a lot of places, it allows us to skip some stages in what could be a more gradual evolution. And yeah, so I think that's all great. And I think it'll be both of those things. So both be like assets that exist in the world and turning them, bringing them into crypto land, but also I think crypto land like coming to the world, and then there'll be a bunch of interactions, right? Like if you start to think of the price of Bitcoin less as the price of Bitcoin, that is like, it is a thing you buy, and more as a foreign exchange rate that exists between dollar land and Bitcoin land, then you begin to talk and think more about Bitcoin land as an economy. And you get to talk and think about it more as a thing that should have a yield curve. And you can start to say like, well, maybe Bitcoin is a global settlement layer, and there are things that hang off of that. But all of that vision is certainly contingent on it being a useful, active thing.
And so maybe this is a bit of a softball I'm teeing up for you. What does the role of bringing the insurance industry into the Bitcoin ecosystem play? How significant is this? Why is it important?
Well, I'm glad you asked, Dylan. No. So let me just say that like fundamentally we do two different things, and that is like the nature of all life insurance companies. So one is that we or all insurance companies. The first is like we're in the insurance business, right? And for us, that is really, these are pretty fundamental needs. That is like life insurance is really about like, what if you die before you're supposed to, and how do you take care of your beneficiaries? And by the way, annuities are really about like, what if you live longer than you're supposed to and you like need cash flow in the back end? These are really like, and the oldest savings product in the world is actually burial insurance, right? So we think that those sorts of needs are real and they exist in the world. So obviously they should be done in crypto. And it's nice that we have a very like good place to start, which is that life insurance in the US and many other jurisdictions has a very privileged like tax position. So what our product now is the value prop for folks is, if you were intending to hold your Bitcoin forever anyway, then why not, or hodl your Bitcoin forever? Like, why don't you put it in this like really efficient tax wrapper? And I can explain all about that. So that's one side of it, is like these are fundamental human needs. Like obviously they should happen in crypto land, right? On the other side, actually, insurance companies play this really vital role in the economy. And we don't think of it that way, but like much of the long-term infrastructure in the world is owned by insurance companies because they have they are like permanent capital. They have very long-term perspectives. So one of the things that we are doing is trying to provide and help create longer term capital markets. So when we insure someone, we are insuring them hopefully for decades, right? But there aren't decade long assets in crypto and in Bitcoin. So we're out there every day trying to like push the limits of what's possible vis-a-vis duration, right? So I have conversations with market makers and investment banks in crypto land, and like one of the first things we always say is like, okay, we're trying to look to do something for like locked up for 3 years, or like we want to do a 3-year term loan in Bitcoin. And this is like completely new. This is like completely different than like people are used to lending overnight or having structured products overnight. It's a very like short-term market. So I think we see it, our core mission as this combo of providing life insurance to the world through crypto, through Bitcoin, and then providing life insurance to the Bitcoin and crypto world through our company. And then on the other hand, being long-term capital, really trying to help build that ecosystem.
You brainstormed, meanwhile, with your co-founder in 2021-ish.
No, very late 2021.
Late 2021.
Yeah.
And then 2022 happens.
Yes.
TX collapse, Three Arrows Capital defunct.
I should say that was all actually much later, right? So we started the company in like the very beginning of the year. I think we were incorporated in January 2022. So we, really left our jobs like February, March, raised capital then, and we're sort of off to the races. And then, yeah, I mean, the really practical thing is, things were very frothy and hot, and we actually, we went to Crypto Bahamas, which was the FTX conference, and to me, that's like the absolute top because it was like the week before Celsius blew up, and we hadn't actually made a lot of like practical progress in our business, but people were offering us a Series A, and like we were literally negotiating potential, additional amount of capital, and then Celsius blew up, and that deal blew up. But it didn't actually affect what we did or were doing, right? I think it's my second company, it's my co-founder's third company. We've had a plan, to get regulated in Bermuda, to have a real life insurance company. We have been very slow and deliberate on hiring. So in some ways, this all ended up being, I don't want to overstate it, like we weren't paying attention, but it was sort of background noise, right? Like FTX blew up and we were like, okay, well, we still are working on getting our regulatory license in Bermuda. And obviously we are fortunate that, a lot of our partners, and by that I mean the BMA, our lawyers, actuarial consultants, some of them I think have stuck with us in a time when a lot of service providers and regulators have been stepping away from crypto. But on a really core fundamental level, like we haven't actually done much different than we would have, even though it's been the bear.
So I guess there's two things I want to pull on that thread. A, just, your experience with the BMA and how they're a forward-looking regulatory body, especially when it comes to the insurance realm. But maybe you can address that secondly. And I first want to hear, so you're finding that you didn't really run into any negative conversations today as a result of the kind of calamities that existed of 2022, the folks that you're rubbing elbows with, maybe because the insurance industry does take this 30 plus year time frame horizon.
Insurance land is very skeptical of crypto. I will say it's been really interesting though that, let me take a step back and just sort of explain how our company works. So we have this entity in Bermuda. It's a regulated and licensed life insurance by the company, by the BMA. And I'll get back to that. And it is entirely denominated in Bitcoin. So that means is when people buy a policy, they pay all their premiums in Bitcoin. When people tragically die and the claims paid out to their beneficiaries, that is in Bitcoin. And everything in between is in Bitcoin. So what are called our reserves, our solvency calculations, our statutory financials, our audited financials, and our investments are all in Bitcoin. And why we did that and why that's such an interesting and important innovation is that the price of Bitcoin doesn't matter to this company, right? Because the assets and the liabilities, that is like money we're given and the money we pay out, are all in Bitcoin. So Bitcoin goes to 35,000 and goes to 60,000, it goes to 15,500. Like none of that matters to us because, that our entire balance sheet moves together. Or actually, we frame it as it doesn't move at all. You know what I mean? So that is really, or it's just unique. There's nothing like it in insurance. And what I think has been interesting is when we talk to insurance people and we have some investors who are some of the biggest life insurance companies in the world, there's definitely a deep skepticism of crypto, and there's a deep skepticism that this is all going to work out in general. But there's a deep understanding of the model we've developed. It makes a lot of sense, right? So we meet actuaries, who don't know anything about crypto, don't own any crypto, don't have any belief in Bitcoin or the crypto economy, and we explain it to them like how we've structured the company, and they nod and say, "Oh, that makes sense. That's like the right way to do it, right?" So I think that's insurance land. Should I talk about the BMA?
Yes, please.
Yeah, the Bermuda Monetary Authority. Look, I think on a political level, Premier Burt, who's like, the head of government in Bermuda, has been very pro crypto. I think the BMA has a very forward looking digital asset business license. You see, Coinbase has put their offshore entity there. I think a bunch of other big names are in the process of getting licensed. So I think it's a jurisdiction that is very pro crypto and open to crypto and really thoughtful in thinking through what's unique about crypto businesses and the custody and all that stuff. At the same time, they are really a globally renowned premier insurance regulator. And actually, the life insurance business in particular is booming in Bermuda, by which I mean there's a lot of new life insurance companies. They have a whole history of P&C insurance and captives and all of that. So I think that is why we picked them, because of this combo, right? So I think for insurance folks, but even for non-insurance folks, like we can say, like Bermuda's the insurance capital of the world. You walk around Hamilton, Bermuda, and you see all these big buildings owned by big insurance companies. Like they know what they're doing, and other people know that they know what they're doing. And working with them has been, a real collaboration. I don't want to get into the technical nitty gritty details, but like, how you do reserving and what your discount curves are and like how, like what solvency means. Like these are things we had to work at, have had to work out with them and are continuing to work out with them. And that's a real conversation. We approach them, we describe something that I think we were fortunate that they thought made sense. And then they have been working with us, month to month to make that all happen. And it is a little more challenging than, so in P&C insurance, or what in Bermuda is called general business, your contracts usually last a year. So there's a lot more flexibility there, right? If you really screw up your P&C business, you just tell a P&C business to stop and all the contracts will run off in a year. As a life insurer or a long-term insurer, we're entering into contracts that are supposed to last decades, until people die. So I think things have certainly been slower than they would have been if we just wanted to do wallet insurance or peg insurance. But it's been a really great collaboration, and it took us about a year end to end to get the license, which is actually slower than their normal pace, but I think quite reasonable given like all that we had to talk through. And then it took us about 6 months to actually like stand up a fully functioning life insurance company, right? So we do know your customer and anti-money laundering checks and anti-terrorist financing checks, and we do underwriting, and we do reserve. Like I like to tell people like we are running a whole life insurance company with 6 people, and that is quite a feat. And it took us some time to get that all up, and then to walk the BMA through it all to make sure that they were comfortable. But again, every step of the way, they've been a great partner. But I think critically, not someone, they're looking to find a way to get to yes, but they aren't just saying yes. And I think that's a contrast with some of the other offshore jurisdictions who really just want the crypto business or want the innovative business and don't really do anything. I think that they They really want to do things right and they want to work with people to do things right. But that is why working with them is so great, because I think all of our users, other regulators can know that they've pressure tested the business.
Hmm. Yeah, I really appreciate the way you kind of shared the scrutiny that the BMA put Meanwhile under. The other insurance entities that are in the blockchain space that have been on the pod have shared similar kind of experiences with the authority. I want to take a sidestep real quick because, and I know that US regulations and the regulatory battles that are going on right now are adjacent to, if not related at all,
Yeah.
to the kind of regulations you're concerned about. But at ETH Denver earlier this year, a lot of VCs and lawyers were talking about this brain drain of crypto talent that was leaving the US because of regulatory uncertainty. And then maybe from a hardcore crypto enthusiast's perspective, we've had a really positive past month in the space. We've had
Yeah.
Fidelity and BlackRock filing ETFs. We had the District Court of New York stating that secondary sales of XRP were, the programmatic tokens that weren't sold as pre-seed or to institutional investors were deemed as not securities. That's not, written in stone yet, but we've had some positive regulatory news in the past month. What is, just from your perspective of somebody who's working alongside various different blockchain and crypto companies in the US, what's just your perspective of the regulatory stance where we're at right now? Because it could go either way.
Yeah, look, I think you're absolutely right. There's just been really positive developments in the last month, and there's increased momentum. I think for a lot of folks, I think there's just a feeling that the SEC was a little bit on the warpath and probably overstepped their bounds. And I think what that'll really do is, I hope, get some of the moderate Democrats in the House and the Senate sort of off the sidelines to work together to like figure out how to actually have a piece of legislation around crypto regulation. And I think that that's actually, I think, the hope for clarity. There'll be increased positive momentum. We'll see what happens in the Grayscale case in the coming months. So it's just been great. And the institutional interest is, I think, only going to increase. And that's institutional investors, that's institutions, like BlackRock and Fidelity, who want to provide user experiences to their customers around crypto. And I think that all of that will just add to this, long-term momentum toward building a crypto, again, a robust global crypto economy in the future. So as for us, we're really happy to be offshore. We're looking at ways to potentially start a life insurance carrier in the US that would be structured in a slightly different way. But we've worked with a bunch of lawyers and compliance folks to make sure our policies like work well for US people and get all the tax benefits of life insurance. So people, who find out about us through a friend, or however they might find out about us, like they're able to come to us and buy a policy if they want, even as a US person. Insurance is really weird in that there is no federal regulation of insurance. Anyway, this is gonna be the whole thing. Another whole podcast. Actually, Congress passed a law that says they won't pass a law around regulating insurance. It's like a really weird space. So there are some ways that you can end up touching securities law and other things. And basically, what we've done is to just really design a product that doesn't get anywhere near any of those lines. So we don't have to worry about the SEC. But I think, again, as we think in decades, the important thing is there's bears and bulls. But I think when you look at the long-term trend, you're going to see more institutional interest and more retail interest in the U.S. and globally. And even though there are going to be those waves, like I think it's up and to the right when measured in long enough time frames.
Something that is really interesting to me, because in the conversation before we started recording, I was telling you how I got into cryptocurrencies, which was the result of learning about 401ks and HSAs and all these tax advantaged kind of retirement accounts. So for somebody who's in the US, or maybe for people who are outside the US and just don't understand the types of tax benefits that life insurance policies can have, can you just like explain like I'm five, how that may or may not relate to 401ks, health savings accounts, things of this nature?
Yeah, so let me explain what our product is. So our product is called a limited pay whole life product. So whole life means it lasts your whole life. There, it's well named. So you pay into the policy, and then whenever you die, your beneficiaries get paid. So this is in contrast to a lot of people I think have term life policies that lasts like 10 years, 20 years, 30 years. So term life, you probably get a really high multiple on what you put in, but it's only if you die, right? And whole life, you're really putting you're putting your Bitcoin in our case, or dollars into a classic whole life policy, and you're really assured to get them out, right? Because you will eventually die. So you get a much lower multiple, but it's more like an investment account, and it's limited pay. So what we do is, for tax reasons, you really want to have it so you have it multiple payments, so you can pay over 10 years in equal installments. And then we have this thing called a premium deposit account, which people can pay upfront. And I can explain sort of why people want to do that. So in general, whole life policies have three benefits, and ours is no different. So the first is any accumulation is tax free. If you set it up with a trust, or it's very particular to people's individual circumstances, but you can have it so it lands outside your taxable estate if the estate tax is something you're worried about. So just this first thing is, like, it's a great way to do intergenerational wealth transfer. It's just a good way to have an investment account and get it to your beneficiaries in a really tax efficient way. The second thing is every whole life policy, has an investment return within it, right? You don't really frame it that way. So usually, you frame it as like, oh, I'm putting $1 million in this policy, death benefits $10 million. But at the end of the day, that's turning $1 million into $10 million, right? So there's a sort of investment return there. In our case, it really depends on your age, is very particular, how healthy you are. But you might put in 10 Bitcoin and get 20 out, right? So there's an investment return like in the product. Like you put 10 in, you get 20 out. And the third thing that's really cool about whole life products is when they're structured right, as ours is you can borrow against the policy tax free. So there's still this option for liquidity. There's still an option, if you need it, to get some Bitcoin out or some dollars out in the classic policy. So for us, again, let's say you put 10 in, the death benefit's 20. Basically, you have like a savings account, like a savings value. In classic insurance, it's called the cash surrender value. We actually just call it the surrender value because, like, is Bitcoin cash? I mean, we think so, but we don't want to get in trouble by calling it cash. And how that works is it's sort of like a savings account that amortizes over time. Like as you own the policy, its value goes up. And what's nice about that is the technical jargon is a non-MEC, a non-modified endowment contract. But don't worry about that. What it really just means is you can borrow tax-free against the policy, right? And that's really amazing inside this Bitcoin policy, right? So Bitcoin's at 30,000 a day. You pay your premiums in Bitcoin. In 10 years, 20 years, Bitcoin's at 300,000. You can borrow a Bitcoin from us, and you could spend it with no tax obligations. And what's nice about that is that you actually never have to pay the loan back, because we net out the loan against your death benefit when you die. So we won't lend you more money than we won't lend you more Bitcoin than could eventually be paid by your death benefit. But it's a way to get liquidity without really worrying about it. The only thing I'll say, though, again, not people's tax advisors, but it's our understanding that you do pay capital gains going in. So I don't want to over analogize here, but I think for people's mental frame, it's somewhat like a Roth account in that you have to put in after tax Bitcoin, right? So you have to pay capital gains in your Bitcoin for buying new Bitcoin, but then you can get this liquidity later that's tax free, or eventually you die and hopefully pass on to your beneficiaries in a tax efficient way. So in that way, you could think of it as like locking in your capital gains basis, or saving in a Roth like way, or something like that.
Is the structure that you guys have built essentially copy and pasting from the traditional using cash for insurance? Did you guys essentially just bridge that to using Bitcoin, or are there also other kind of new nuances that you've added to the policy that's a little bit more innovative than the traditional insurance space?
It's funny the way you frame that question. It's actually somewhat the opposite, which is that we didn't copy and paste dollar policies because they tend to actually be really complicated. There's just all this history and like interacting with agents and like how things are sold and like you want to say you're getting S&P 500 returns, but it's hedged on the bottom, and like it's just actually a lot of these insurance products are just really complicated and really unnecessarily complicated. So what we really did is we took a product design that's like out of the 1850s or something, right? It's super simple. And I think that's actually the nice thing about crypto is not that you have to reinvent everything, but because are reinventing everything, sometimes you can just like have a much simpler, clearer value proposition for folks. So our value prop, I like to use the 10 because you pay in 10 years, right? So you pay one Bitcoin a year for 10 years. We promise your beneficiary is 20. That's really the whole product. I mean, there's all the tax stuff and there's a lot of benefits and blah, blah, blah. But like actually conceptually understanding the product, like that is the simplest whole life product you can imagine, not the most complicated.
And where does that additional 10 Bitcoin come from? Is that just from the increasing float that meanwhile is going to aggregate over time?
Yeah. So rewinding all the way back to like life insurance companies are this like critical piece of permanent capital in the infrastructure. So what we do is very conservatively. This is like what a lot of our conversation with the BMA is, and we have an independent board of our insurance company and risk management procedures and an investment committee. Basically, we lend Bitcoin to institutional counterparties for yield, and that scares a lot of people. But our target IRR is quite low. It's about call it 3%. So we're not trying to do crazy, no offense to anyone, 16% DeFi stuff or turn it into wrap Bitcoin and lever it up 10 times and, make directional bets. So what we do is we go to like institutional counterparties. So think like market makers, hedge funds, maybe some miners. We've had trouble finding people we think are credit worthy. And then we're like running a private credit desk. This is not crazy on chain stuff, although I hope in time there'll be more and more lending of Bitcoin in like ways that are institutionally suitable. But like we negotiate credit contracts with people, right? Like we're gonna lend you 100 BTC and you're gonna give us 3 BTC for 3 years and you're gonna pay us back our principal. And then like, where are we in the bankruptcy stack? Like, what is the collateral? Like, how do we perfect the security? It's like real credit operations. And I think that's something that we really want to draw a contrast with. Obviously, I think credit has had some hiccups over the last year or so, but like this is very deliberate, and that is part of the point. Is we think there needs to be debt capital markets in Bitcoin. There needs to be lending, and critically, we're trying to push durations out, right? So most lending that happens in Bitcoin and the rest of crypto, you're talking about overnight, 1 month, maybe 1 year, if you're lucky. We're actually trying to go to people and say, we would like to lend you Bitcoin for 3 years. And how can you model your cash flows? Like, what can you do with that? How can we have trust, or how can we work to get some certainty that you'll pay us back? You'll have that capital to do that. Then the other thing is well regulated by the BMA, like every insurance company, we are essentially posting our own capital, right? So every time we write a policy, like we have to put a little bit of our own capital there. And it's not exactly how insurance people conceive of it, but like in some ways that's first loss capital, right? So if we had some loan go sideways, like our capital is what's going to get hit first, not our users' capital. And then we would be required to post more capital. So that's what we do. We yield Bitcoin yield, low risk, low yield to turn 10 into 20 over 40 years.
Yeah, I really like the way that you frame creating a more robust and long living Bitcoin economy by locking up these Bitcoin with institutional clients. So I guess kind of the major hurdle then would be, are these institutions that are willing to be counterparties with you, are you starting to hear more and more whispers that they're coming into the ecosystem? Are you finding it easier and easier as time goes on to find folks who are willing to have a 3-year time frame?
Well, I don't know about easier and easier. What I would say is if you asked me a year ago, I would have said this is the existential threat to the business. The not threat, the existential like bet of the business. This will exist and it'll work. Where I'm feeling now is like we have a lot more borrower interest than we have capacity. We have a lot more, and that's great because we can be really choosy. So we are already in a situation where we're saying no to a bunch of people, or someone approached us and like, I'll pay you 15%, and I'm like, not only does that sound sketchy, but even if it wasn't sketchy, like that's not the risk reward for us, right? Like we're really just in a different place on the. So we've been talking a little bit internally about maybe doing something with that skill set, whether it's looking out and like maybe raising a fund that's like for BTC yield, but it's more like a private credit fund with some duration. But I think we're feeling more and more confident that this part of the business is something that can work now, but it is definitely still it's a long-term bet. Like we believe there will be, not only will there need to be a robust Bitcoin economy, but need to be robust debt capital markets like long into the future. And actually, again, in collaboration with the BMA, what we've done is we've put a sort of like exit clause in our contracts for the first 10 years where we can like give everyone their money back basically if these debt capital markets don't exist. And that's really because we want to be aligned with our users. We don't want to be in a situation where we're chasing risk to meet our guarantees. The only way we want to run this business is if like the risk reward directly matches up with the types of risk that are appropriate for a life insurance company and the types of durations they should have. And yeah, we're seeing more and more positive signs that that's going to work out. But we also, every step of the way, we think that, well, actually, let me just take this comment. I think sometimes life insurance can feel, there's the old line, it's a thing that's sold, it's not bought. It can feel a little sleazy, maybe, or like the way it's sold, the way it's designed, there's a lot of complications, there are riders, there's complexity, there is this like person who's selling you this thing and they're commissioned, and something about the whole thing can feel off for people. And I think one of the reasons that we're so happy to have been able to design a super simple product and to be doing something in a space that's brand new is to have policyholders first. And obviously, I think every life insurance company wants to have their policyholders first in their guarantees, but also we think that extends to the product design, it extends to the user experience, it extends to everything. And the investments are just one part of that. And it's something that quite literally, actually, when we talk about our values, which I know sometimes can sound like this really corporate exercise, but it actually does animate us every day that like one of our values is to think in the long term, because like, the obligations and promises we're making are super long term, and there's just no shortcuts. And that means we're a little slower, than some others. But I think that's the right cadence for an insurance company, is to be a little slower, but to build for the long term. And the other is we frame it as to keep our promises. That's like in a literal sense that like we're making promises to our policyholders, we're making promises to each other, we're making promises to our regulators. But I think that that's something that we try to have it, or we have as an animating part of our culture, that like we keep our commitments. And those two things together, we believe, are going to allow us to hopefully, honestly, not just build a large life insurance company or the largest life insurance company in the crypto economy, but we have ambitions to like be the largest life insurance company, period.
That's an awesome place to wrap up. So, if anyone's interested in learning more about you or Meanwhile, where can they reach you? And then, secondly, who are the types of folks that you're interested in chatting with right now?
You can learn more at meanwhile.com. And the way it works is we have a wait list, and the wait list, some demographic questions, just some indication of how big a policy you want, although that's not binding. And then you sign some disclosure forms that are like, we can make sure you're not a terrorist, and those sorts of things. And then every single person who signs up on the wait list, we jump on the phone with, or we ask for a Zoom meeting. And that's because, the product's complicated. People have questions. They want to talk about custody. They want to talk about the investments. They want to talk about their particular tax situation. And even though we're not their tax advisor, like, you can point them to people and give them some indications. So that's really, if you want to learn more, you can sign up on the website, and that's not a commitment to buy. That's really a commitment to talk to me, for better or worse. And what are we looking for? Like, look, our minimum policy size is 5 BTC paid over 10 years. In Bermuda, it's called sophisticated investors. In the US, you might think of it as accredited. We're only interacting with people who have a certain size, and that's, again, not our permanent ambition. Our ambition is to figure out how to work with people with smaller stacks. That's where we're at now. And I'd say that we have two different customers. We have true people with big Bitcoin stacks, Bitcoin whales. That's about half the people so far. The other half are just people who, we have tech entrepreneurs who have 5 Bitcoin, and we're planning to hodl it. And we have ETH folks who have this side store of value in Bitcoin, a few Bitcoin, and they might want to buy a life insurance policy. So we do sort of split the customer base into maybe BTC whales and everyone else. But actually, again, on the policies we've bound, it's 50-50. So I think if you're in either of those groups and Bitcoin life insurance sounds interesting to you, you should head to the website.
Awesome. Well, thanks for joining us today, Zac, and for hopping on the mic. It was really cool to hear about this innovative and yet not so innovative product that you guys are providing. And I'm definitely looking forward to keeping my ears to the ground and seeing how Meanwhile can expand and plant its roots in this traditional industry and start onboarding new users who never thought about life insurance policies before.
Yeah. Perfect. Thanks so much, Dylan. I really appreciate your time. This was a great conversation.
Cheers. Well, what did you think of that conversation? I thought it was super cool to chat with someone who formerly worked in the government and policy realm, but parlayed those experiences into building in the digital asset space. It was also really cool to hear Zac's philosophy about the role that the insurance industry can play in amalgamating the Bitcoin economy and making Bitcoin become a multi-decade asset. Also, it was just really interesting to learn more about how using Bitcoin to pay for life insurance can actually help decrease the complexity of the product offering. On that note, I want to thank you so much for taking the time to listen to the Smart Economy podcast. If you liked what you heard and want to support the show, please keep Neo News Today in mind when voting for your Neo Council representative as part of Neo's governance process. We appreciate you and look forward to catching you next time.